Good morning, everybody. I apologize for being late this morning. My alarm went off and I didn't jump right out of bed, truth be told. So, been running pretty damn fast this morning. So, apologize for the lateness and the inconvenience. The focus today is going to be, the fallout from the Russian missile shoot-down situation in Russia yesterday. These are not these are not fired from shoulders. These are not weapons that any average guy can pick up. It requires a level and a degree of sophistication. These are radar-driven. Under a command and control system, the guy that actually pulls the switch and fires the missile can't do it without getting permission from his superiors first. They can't do it without permission from whoever controls that missile battery. You don't give these missiles to rebels. The guy that released the I guess Facebook or Twitter message, we got another one yesterday, is ex-Soviet intelligence. He's in charge of the rebel operation in the Ukraine, probably a Ukrainian citizen that served in the military. So the issue gets down who ultimately controlled this. Now my feeling is it was probably like, whoops, we shot down the wrong airplane, because they've been shooting down Ukrainian helicopters and transport aircraft on a regular basis. So this originated from Russia simply by virtue of the fact that if they were dumb enough to give rebels a sophisticated missile battery like that, what in the hell were you thinking when you did that? The other side, the worst side of it is these rebels are under the direct control of Russia, and you can make a pretty strong case that that is the case. So Russia is behind this one way or the other. What will our government do? Yesterday, you saw what our government's going to do, nothing. And again, this just reflects, without strong leadership from the Western world, anybody that can grab a piece of territory or an asset or achieve a political objective, with or without force, to advance their national interest is going to do it. There are no reins. Libya is falling apart at the seams, about to be taken over. We know what's happened in Egypt. Egypt was the most stable, and it was a society that actually allowed Islamic society that actually allowed Christians into it. It's coming apart at the seams. Iran is on the rise. Iraq is coming apart at the seams. We've announced our withdrawal from Afghanistan. It's coming apart. China in the South Seas is taking on the Philippines and Vietnam, and they're threatening Japan on a regular basis. So if you were any one of these countries hoping for consistent long-term support from the United States, you'd be questioning that, and that's what creates these conditions. So for what that means for us as traders is that we've got to be very, very careful going home short gold, going home short crude oil, going home short the note and the bond. That space between the Globex opening and what happens in London when the news out of the Far East, etc., has settled in and hit. So going home long, you have less exposure. Now that's not a strategy that'll make you money, but it's just something that you have to think about. So what you'll see is the big money, given these uncertain conditions, will trade via spreads, where you take away event risk. And last night the knob spread went out at 24. This morning it's 12.26. It's up 230 seconds, yet the markets have sold overnight. So that's a good way to do it. And how would you do that in stock indexes? You'd be long the Dow and short the index of choice, and probably the most vulnerable index to heavy selling. The first case would be NASDAQ, and maybe the second would be Russell. Now, for you, Rich, I don't cover the Russell. There's only so much time in the day. I go to the index that has the most volume, and that is the E-mini. If the E-mini is going to rally or sell, the others will rally or sell too, with the spread between the E-mini as the buffer or the differential. So that's where we are. I understand people trade the Russell because it is more volatile, that you get more bang for the buck. In this case, if the market were to start and head south and you wanted to maximize your dollars, you'd be short the NASDAQ or the Russell. And if it were going to rally in times of uncertainty where there's scared money, you're long the Dow, you short the Russell, you short the E-mini, you short the NASDAQ. The scared money always goes into the Dow, so that's the way that you play it. Okay, looking at the note, we had an attractor at 25. We did not make it. All the short covering and buying was absorbed on the opening on this first thrust up. So we've got pretty good resistance, 16 to 20, and then definitely at 24 to 28. If you wanted a limit sell, and it would be new highs, it would be against this high volume number right here. So I think the easiest trade to see is failure to get through the 16 to 20 area. So selling failure, take out 1620, then selling 23s to 27s would be S2. On the buy side, I like 5 to 9 on the basis that the E-mini will rally a little bit this morning, as they will squeeze those that went home short overnight that have lousy trade location. And that'll give us maybe a chance for a sell-off in the note and the bond. And then 29 to 1 for buy 2. This morning's news, Michigan sentiment, 83.5. Not a big market mover when there isn't any other news that can move the market. But the market's focus is not going to be how the U.S. consumer feels right now. It's going to be how the world reacts to what Russia did, or Russia backed. And my guess is the world, without U.S. leadership, and we've already shown our hand, are going to do nothing. And that will make for a very reluctant seller in financials, long-term seller, and it'll make for a very reluctant long-term buyer outside of the Fed supporting the market in stock indexes. I think that buying into breaks is still the better play on the financials. When you look at the F1 screen, on the note, you can see that we've had pretty good buying off the lows. And again, I'm just saying longer term, why is the knob spread not weakening? Why has it gained strength over the last 3 months? The financial and currency players are playing for economic contraction and or safety from surprises like we had yesterday. And it's pretty hard to ignore that. So we've had pretty strong buying here. We're getting into the upper half of this market. The real rejection is at the 2608 level. This area up here, this is where the real longer term selling is. So we got a ways to go before we get up to that. Okay, taking a look at the bond quickly. Same situation. The bond is being bought on breaks by the long-term spreaders, and I'm working with a spreader right now who's really good at what he does, and the whole basis of spread programs is long-term fundamentals, the normal supply-demand relationships and interrelationships between producers and manufacturers or refiners or people that take that raw product and turn it into something to sell. And the whole basis of the program is long-term fundamentals that are there every year. If you're a producer of whatever it happens to be, or if you're a manufacturer of whatever the other person is producing, that doesn't change. That doesn't mean every spread works as it does historically, but what it does get rid of is event risk, and it allows the big-time money to get into the market and engage the market and eliminate event risk, and that's pretty important. Okay, on the 30-year, we're going to sell failure to take out 12 to 16. That would put your sell at 11 to 15. And then 19s to 23s. We're going to lean against resistance for sell 2. On the buy side, we're at 07. Last rotation stopped at 02. We're going to make 30 to 02 buy 1. Might take 3s or 4s to get in. We'll adjust as we go along. And 21 to 25 for buy 2. Okay, looking at gold. Gold has come off a little bit. It isn't doing anything. Same situation. Am I going to come in and be a heavy short of gold this morning? Probably not as a retail account. As a central bank, could I sell gold this morning and knock it down? Hell yes. And they do that. So we're just exactly where we were yesterday, selling the 25 area. Makes some sense. Then the 35 area plus or minus would be the second sell zone. On the buy side, we've got good buying. Last rotation down was in the 1304 area. That started the rally. So the 1305 area, give or take, is going to be a reasonable buy area. Gold is selling, and the reason gold is selling is that yesterday the United States told Russia exactly what they were going to do, nothing. And so Russia's in the driver's seat. And we got a little room to come down. And, you know, it might take a 5 to 7 to get in, so we're going to make buy 1 this 05 area plus or minus. And then we're going to make buy 2 the 98 1300 stops beneath the buck. Who outside of a central bank would go home short gold this weekend? Probably not too many people. Last rotate up and a W period stopped at 12, so 12 to 15 will be sell 1, and then 20 plus or minus 18 to 20 will be sell 2. And again, it's the dynamics of where do you put your money. I mean, nobody throws money at the market when it's their own money. Except for the large central banks that are not held accountable for what they're doing. It's just the way that it works. I mean, would you put your money out? With the risk involved in doing that? Probably not. Okay, the euro, once again, I mean, it's okay. What are you doing? Europe is not going to strike out against Russia. They'll make noise. They'll restrict. You know, most of the people that are being added to the restricted to fly lists are actually from the Ukraine. They're bit players. Nobody's touched Gazprom. And why has no one touched Gazprom? Because 30% of the EU's natural gas comes from Russia. So they're not going to do anything to jeopardize that. And you wouldn't either. So we are drifting lower. I think we've got a pretty fair chance of 135 before it's... I'm really not too interested in getting long till we get to 135. And the impetus behind that buying would be short covering. You know, they've driven it down from 36.50 to 135. Time to cover your shorts. You see volume is steadily moving lower, not by much. We're still dealing with a B. So here we are at 27. We left last night 35 to 45 sell. and then 60 to 70. So my guess, that's probably still reasonable. Leaning against 75, and that's the way we'll leave it. I don't see a lot of opportunity in this contract right now, because people will be waiting to see what happens between the Russia and the Ukraine. The Ukraine will not cut off the gas flow to Europe because they get paid for the gas crossing theirs, and there's wonderful opportunities to steal some of that gas too. So it's in the Ukraine's current head thief to let the gas flow and make the most of it. That's how it works in that part of the world. Every thief in a dictatorship out there, if it's a one-horse pony, one-trick pony, one-horse show, is thinking about ways to steal that oil or those diamonds or that gold or whatever it happens to be. And that's why dictators have secret police, and they're always shaking things up. And it's not all directed against those that are desirous of freedom. Those are the pawns that are pushed around by the next dictator wannabe to gain control of that country's assets. Okay, crude again. We got really good support at 103. We've got good selling at 104. And the market is trading lower right now. So 275, 103 will be buy one. I don't think anybody goes home heavy short outside of somebody who can deliver in. So you'll take the spec short out of the business, and 225, 250 will be buy two. And on the sell side, the spill was from 28. The last rotate up was 50 in the W period and V. So this 25 to 50 is aggressive. Probably the first selling opportunity. The 75 to the buck is where we like it. So I like selling against 104. I like buying against that 102.50 area because of this volume that's down there. But the 25 to 50 is a very, very aggressive trade. And if we come up there and we get failure, we can take a shot at it. But if we don't make a new low for the day session, you get out of that trade. Okay, finally the E-mini. Yesterday, the Western world, because of lack of leadership, is out of our country. I mean, it looks like 23 citizens were killed. And our president basically said nothing and went on to 2 fundraisers last night. So I'm not saying he's not going to come back and not do something in the future, but what he told the rest of the world is that there will be no confrontation from the United States. There will be no demands for accountability from the United States. So nobody's worried about the Cold War, which has reemerged, turning into a hot war right now. And that pretty much gives Russia the ability to shape this the way that they want. The Ukraine is not allowed into the crash site. Russia has taken control of it. The black box has gone to Russia. I mean, we already know what brought it down. But Russia right now, my guess is some dumbass dupe will be blamed for this. Obviously that kid is going to be shot or eliminated. Get rid of the evidence, and whoever his commander was too. And then the plausible deniability is what Russia will get out of this. Okay, right here, this selling at 65, this K, L, and M period. So 61 to 65 is pretty good resistance. We have the spill from the G period low at 59. So the first sell is 59 to 61. and the second cell is 64 to 66. The second cell, we got a lot going for us on the second cell. Now, what people don't understand about, again, the hierarchy of the buy ones and the buy twos and the sell ones and the sell twos, if number one support and resistance hold, we've got continuation of whatever has taken us to that point, the opening in the morning. If it doesn't hold, we go to our number two, then we're dealing with a market that's a little higher or a little lower, but we're not going to start a new move, break out or break it down. So the number one points are, you take them, you're in early, you see what happens. If you don't see what you like, you get out. The number 2 points, you can give some room, and you have to remember that. So we got London's low against 50, and so buy 1 is going to be in the 50 area, and buy 2 is going to be in the 45 area. And my guess is we're looking at a trading range today. We're probably going to be a little higher on the opening. We're going to squeeze those that went home short overnight that have lousy trade location, and that would be those that sold below 60. So the ideal place to establish a short, if the market is going to begin to sell in earnest, is in the 65 area, but we're going to have to take a hard look at it in the 61, in the 60 area. So 60 to 65 is resistance. Obviously, we'd like to get short at 65, better than 60. But if the market rejects 60 and it starts south, you have to get short. That's continuation of yesterday's move. 50 is a round number. It's a trading target that makes some sense, as is our 43 to 45 area. Okay, it'll take at least 20 minutes to get everything up and posted. I'm going to get busy on that. We'll put up the